Hey, Grant Cardone here, and I want to share with you why multifamily apartments, real estate, particularly in the state of Florida, is not too high. I know a lot of you out there right now worried about crash coming, real estate crashing out. Not to laugh at it, it's not a joke. It is a possibility, and I'm going to share with you today, though, why multifamily, particularly in Florida, Fort Lauderdale, Miami, you can go to Orlando, Tampa, the Gulf Coast of Florida, and why there cannot be a crash there, and why, in fact, we're at the beginning of a super cycle in the appreciation of real estate values in the state of Florida, which will probably extend to all the states connected to it, Georgia, Alabama. Texas will benefit continually. Arizona will as well, the Carolinas, and I'm gonna tell you why, okay? There's basically about six primary reasons. Number one, interest rates are at all-time lows. Now, the kind of real estate we're talking about right here is particularly like these big buildings, okay? So what does interest rates have to do with that? Typically, interest rates are considered to be a driver of single-family housing. But what's happening with this particular asset class, the multifamily, is traditionally single-family houses, for the 60 years I've been on this planet, were bought by single-family homeowners. People that were interested in mowing their grass and fixing the roof and painting and raising kids there. Schools, raising their children there and settling down, maybe getting married for the first time. Well, those homes today are being replaced by investors. Because of the low interest rates, 3.5%, 4%, even lower in some cases, investors are able to pay premiums on single-family homes that the rent from that single-family home, this has never been done before in my lifetime and never before in the history of this country, where investors are now investing because of low interest rates in single-family homes as a rental stock. Okay. Number two reason, and that's not gonna cease. By the way, number one reason, it's not gonna go away because the Fed has already said it won't be raising rates. They're saying there could be some slight adjustments over the next year, but we're at all-time lows right now. I just got a loan on this particular asset right here behind me. I think the loan on that is going to be 2.8%. It's crazy. Below 3% is insane. On a tremendous amount of money, by the way. It's a $160 million loan. So that allows me to be able to actually pay more for the property. And I think, this is a bit of a contrarian view, but I think that real estate interest rates will actually go down before they go up. They might spike a little bit, but they'll fall before it's over with. I'm going to spend 3 entire days talking about what kind of real estate will be supported by these 6 reasons. If you want to grab that, hit the link below. I'll give you a free training. Then I'm going to talk to you about a 3-day training, but I'll give you a free training if you want to take advantage of that. Click that link and I'll give you the free training. If you want to come visit me for 3 days, I'll give you that link as well here below. Okay, number 2 reason, we got supply issues. Now in the state of Florida, where I live here in Miami and Aventura, we've had a supply issue for 15 years, a housing supply shortage. That housing supply shortage has also been extended to Utah, Nevada, Texas. Texas a little less than others, but they're still not building many single family homes right now. If you look in your city in the Carolinas, Georgia, Alabama, they're building apartment buildings to replace the single family homes. Why is that? Because the cost of single family homes to build a single family home is prohibitive. And the builder, the same builder, the guys that have been building for years, the major top 3 builders are actually building apartments rather than building single family homes because they can make more money on an apartment deal than they can building a single family home. They can actually do it in less time, build out more units, reduce their risk to their investors than their own money. And so you're seeing a shortage of single family homes. Also, back to number 1, that single family home shortage, the supply is being consumed by investors, creating even more of a supply problem. And there's literally no way to fix that problem in this country. On top of that, there is a shortage of all affordable housing in America. There's nobody building affordable homes. There's nobody building affordable apartments. It is not being built. It is a complete shortage, which creates a tremendous upside opportunity to the affordable end of multifamily. The middle side of affordable and the low. When there's no low and there's no affordable and there's no moderate, guess what? It pushes everybody up the food chain. Number 3 reason, the return of the international buyer, particularly in the United States of America. especially in the state of Florida, okay? The Russians, the Europeans, South Americans, and the Mexicans have been removed from the market for 2 years because of a thing called COVID-19. Look, they're not here. Those buyers have completely gone from the marketplace, and the marketplace went nuclear without a demand, without a buyer. Okay, literally, we lost 5 different buyer types. The Russians, we lost the Europeans, we lost the South American money, we lost the Mexican money. Maybe there's four majors. The Canadians, yeah, we lost those because they can't come down here and do due diligence on deals. So we've lost that buyer. When COVID, the Delta variant, the Omicron, whatever you call the next version of whatever this thing is, when that finally dissipates and goes away and we get a solution to it, to whatever it is, those different 5 buyer types will push money back into the United States and start buying these same asset classes that they were buying before COVID. 4th reason, we have migration, massive amounts of migration. You can dispute these 6 things as much as you want, but the reality is they're reality. And you cannot dispute the reality that we have migration from New York, New Jersey. I don't even have to say the places. Everybody knows what they are. The entire state of California is moving into Arizona, into Nevada, into Utah. They're going to continue to migrate west or east. They're seeing that in Texas. You're seeing Elon move out of Silicon Valley down into Austin. You're seeing expansion into the south and into Florida with the SpaceX. So that's going to continue to happen. Also, New York City technology, New York City fund companies, hedge funds are moving into Miami and Fort Lauderdale like this place is on sale. That has influenced the pricing and appreciation from Palm Beach to Fort Lauderdale down to Miami like at rates we have never seen before. In fact, we have migration in Florida this year from the state of California, which used to never happen. People never traveled that far at historic levels. We have more people coming from the state of California than ever before in the history of the state of Florida. Okay, 5th reason. Big I, the old inflation. Inflation is here, they say. It's caused by money printing worldwide. Okay, America's not the only country that printed. Ladies and gentlemen, y'all talk about $4 trillion printed or $6 trillion, $7 trillion is printed by the United States government. Understand that every single country in the world printed as a result of the pandemic. So what happens when you print that much money? When you print this much money, guess what? It's going to lift pricing. It's going to lift pricing. Now, pricing's only been lifted about 15 or 16% nationwide. We printed 40% of all the US dollars in circulation today were printed in the last 18 months. Now, remember that with real estate, okay? And again, I'm going to show you there's a particular real estate class in a particular location and a particular size that I'm going to show you for free that you should be looking at in your city. If you find these assets, and you will if you look, if you know exactly what you're looking for, I'll show you how to buy it. I'll show you how to do it with no money down. I'll show you how to raise money if you need money. Most importantly, I'll show you how to get debt on the deal. And then I'm going to show you, on top of all that, I'm going to show you how to actually increase the value of that one property by at least $1 million or more. And doing that with no money, no debt, no credit, no nothing. I'm going to do that for free. All you got to do is click that link and I'll give you that entire training. All I ask you to do is go put it to use, become an investor, and then tell people, hey, Grant Cardone turned me onto this super freaking hack in real estate. But remember this, if we printed all this money, okay, and 40% of the US dollars are in circulation today that didn't exist before, okay, and then we have appreciation. You'd have to expect some appreciation because of that. Let's say we had 20% appreciation, okay? This is not to scale. But remember, this is a massive print up here. 40% of all the US dollars in circulation today were not in existence 18 years ago. So these property values, this building's value went up by default by 20%. Everybody's like, oh my God, housing's overpriced, apartments are overpriced, people are paying too much. Well, what you don't understand is this. When I buy an apartment, I'm borrowing 4 times my down payment. So when you say there's $4 trillion was printed, actually $4 trillion would buy $16 trillion of real estate. $16 trillion. You're talking about entire countries, like maybe all of Europe's GDP or some ridiculous number, right? So these numbers, the value of real estate, the argument could be made based on basic economics. The value of this real estate could literally go up to the same level of what the print was, because I'm borrowing 4 times the money to buy real estate. This particular property behind me, okay, I'm putting a fourth of the property's value down. Okay, so I'm buying the property's value at this point, and I'm only putting a fourth of the money. Well, how much money was printed? $4 or $5 trillion. $4 or $5 trillion would literally buy $20 trillion worth of real estate. So things could inflate another 50% easily, maybe even 100% before we actually caught up with the money supply that has been created. Okay, number 5, I think it's number 5 or number 6. The demand for yield is number 6, actually. The demand for yield, okay? There is no place to get money today. And this was the original inflation that's been happening over the last 10 years, what nobody was talking about. Interest rates 10 years ago were about 5%, then they went to 4.5%, then they went to 3.75%, then they went to 3.5%, then they went to 3.18%, then they breached 3%. And everybody's like, oh my God, interest rates are so low at the bank. I'm talking about what you earn. Today, the interest rate at a bank today is 0.018. That is literally one eighth. It's like it's nothing. You need 8 years to earn 1%. 8 times 0.018 is what, 96, almost 100. So 1%. So you need 8 years to literally earn 1% on your money. Every $10,000 then earns $100. Yeah, $100 every 8 years. Are you kidding me? This is crazy. It's wacko. So, point is, how can real estate be overpriced, already too high? How could it crash? Here's 6 reasons, okay? Money supply, interest rates, return of the international buyer, migration patterns that nobody can dispute, inflation, and lastly, money's got to find a yield, ladies and gentlemen. Money must find a yield, okay? The average dividend of an Apple stock is 0.015%. It's almost 0.25% or less, okay? Bitcoin pays no yield. Ethereum pays no yield. Checking accounts pay no yield. Money markets pay no yield. Mutual funds pay almost no yield. AT&T, yes, it pays a yield. It pays 8%, and it lost 30% of its value this week, okay? So the things that are paying yield typically have more risk with them. They'll probably reduce that yield like they did during COVID, by the way, dividend yield. And when there's no dividend yield, guess what people have to buy? They got to go to buy real assets that provide cash flow. That's why I believe these apartments, they're trading for a 3.25 cap right now. Okay, 5 years from now, they'll be at a 2.5 cap. 2.5 cap. The cap rates will actually go down, which means the prices will go up. If you want to learn more about this and how to take advantage of it in your own backyard, click that link. My guy's going to give it to you for free. It's a 3-hour training, completely free, no strings attached. Grab that thing. Then if you really love that and you're really serious, come to one of our live trainings. It's a 3-day training with me. I'll share with you exactly what you're looking for, how to buy it, how to find it. Maybe I'll even put money in with you, okay? Our 3-day class, we put together investors and people start looking at deals together. Is it a good deal? Is it a bad deal? Is the location right? Can we get a loan? Can we get a better loan? Can we get a better price? How can we raise the money maybe from that audience? So this is free. Just click the link. It's completely free. And if you want to come see me at the 3-day event, make that decision later, and then I'll hook you up with other investors, banks, lenders. Due diligence, underwriting's done for you. Literally, I walk you through the entire process and show you how to find your first $1 million deal. It's in your own backyard, maybe 3 million, maybe 5 million. Look, my first deal made me $3.8 million on my first deal with no money down. Okay, that deal's out there in your marketplace today. Go grab it. Hope you enjoyed this. Subscribe to the channel. We drop a lot of video here, and I'll give you a link to the transcript of this if you want. That'll be in the link below. But make sure you got notifications turned on. I drop video like this constantly. I want to show you how to get in the game. I started with no money. We have $4 billion worth of real estate. And for whatever reason, I take the time once or twice a week to drop a video like this to share it with you, because I know I'd want that if I was on the come up. What I'm learning, from the real estate game, how you can get in the game. Hopefully it provides you with inspiration and a strategy, and maybe you're one of those people that actually takes the information and uses it, puts it in place, and all I ask you to do is turn other people onto it. Let them know, hey man, this guy Grant Cardone is helping me in the real estate game. I can't buy everything, but maybe the two of us together can start buying more stuff. Okay, God bless, be great, and go get that deal.